Social Security tax planning mistakes that financial advisors make all the time. Had a subscriber to my YouTube channel share with me a video of a firm that I don't know if I want to mention it or mention the video. I don't know, because I don't want it to sound like I'm bashing this guy. But anyway, and they royally screwed up the tax planning things when it comes to Social Security, and it's bad. And now he's pretty close. That's the issue. He's close, where it sounds like he's on it, but he's not. And for the average Joe, if they follow his scenarios, they're being and I don't want to say misled like this guy's doing it nefariously. I just think he doesn't know. And I'm sitting there thinking, man, and I hate calling people out. I just don't want to. But I'm sitting there thinking, man, if we cannot make our industry better by providing proper info, then more and more people will be less inclined to look at us as the experts that we hold ourselves out to be. And we're just, at some point people say, you guys keep saying this, and yet you guys keep providing wrong information. It's kind of like the solar photovoltaic industry, the PV. You put some PV panels on your house, your rooftop, and you'll have unlimited power for the rest of your life. It's just as fake, man. It's fake. And we know that because here in Atlanta, we get on average 170 watts from the sun per meter squared. You get a 25% efficiency solar panel, which is pretty high, by the way, and you're getting, what's that, roughly 45 watts. That's what you're getting. So you take your 45 watts, you times that by 24, that's going to give you, what, about 1.4, something like that. 1,440 watts over the course of a day. So basically 1.4 kilowatt hours is what you're getting there. All right. That's for a meter square of space, by the way. That's not small. You might be able to get by with a pretty significant array of powering your house for just basic electricity. You're not going to get by for heating your house. You're not going to get by for transportation. You're not going to get by for flying. These things aren't going to happen. So what happens is that as the over-promising and under-deliver comes in the PV industry, you start saying, yeah, all you guys are saying this, and basically it's all the boy who cries wolf. I just don't believe you anymore. And that's the issue with my industry, is that we have these channels, we have these ways we talk that sound good, but then it's just a quick pullback of the curtain. You realize that is based on a house of sand, and or based on building a house on sand, because it just is going to fall. And man, it happens all the time. All right, so let's go to this guy, and he's got Rick and Sue. All right, so Rick and Sue. And they got a $30,000 pension, $30,000 required minimum distributions, which would be a pretty significant RMD, by the way. So I don't know how old they are, and $40,000 of Social Security. All right, so the first thing we're going to do is, when we're looking at taxation on Social Security, or taxation generally, the first thing we got to do is how much of this $40,000 is going to be subject to taxation. Now, I already have a gauge, because I do this all the time, that how much this will be. But let me show you the formula for how it's done. So remember, when you're in retirement, there's a Texas two-step. You got to figure out how much of your Social Security is subject to tax, and that way you take that amount of money and put it into the other income that you have to figure out your AGI. So we got to figure out our provisional income. So first thing we do, we know these things are going to be factored into provisional income. So that's $60,000 there. But then only 1/2 of your Social Security would be factored into provisional income, and that would be $20,000 there. So our provisional income is $80,000. Now what we do is we have to say, because we're married filing jointly, we know that the first $32,000 of this $80,000 will not be subject to taxation. But we know the next 32 to 44, the next $12,000 will be subject to, well, not subject to taxation. It will be taxable of our Social Security benefit. So 50% of this amount will be subject to taxation. All right, and that's going to be $6,000, because we have 80,000 minus 32, which gives us what's that, 48,000. All right, so we got 48,000. The next 12,000 is taxed at 50%, and that gives us what, 36,000. So that's going to be anything over 44K is 85% of that subject to taxation. I think I don't have my here it is. And my trusty calculator says. So we got 36 plus 12 plus 32. That's how we figure out what our tax rates are on our provisional income. So in this case, we got 36,000 times 0.85, 30,600. And we add these two things up, it gets 36,600 is our taxable Social Security, except for the fact you can't have more than 85% of your Social Security benefit being subject to taxation. So in this case, we know that 34,000 will be subject to taxation. All right, so we know that's how much of our Social Security will be subject to taxation. So again, our provisional income is $80,000. The first $32,000 of that provisional income is not subject to any taxation. The next $12,000, 50% of that is subject. In that case, is $6,000. The next amount above 44,000, so 80,000 minus 44,000 is 36,000, is subject to taxation at an 85% clip. All right, so the 85% of that amount is subject to taxation. You add these two together and you get 36,600, but that is more than what is allowed by law because only 85% of your Social Security can be subject to taxation. So we figured out our provisional income. We figured out how much of our Social Security benefit is subject to taxation. Now we're going to figure out our AGI, and our AGI is quite simple. It's this plus this plus that. That's what our total AGI is. In this case, what's that? $94,000. All right, so $94,000 is our AGI. All right, is that, yeah, 94, there you go. Yep, there you go. So let's erase this and we'll start a different one, because now we got to figure out what our tax brackets are. So 94,000 is our AGI. We have our taxable Social Security plus our pension plus our RMDs. 94,000 is subject to taxation. And we're going to go here, crack how, right there, roughly. There we go. All right. Let's just dry that up real good. Good boy, Pablo. Good boy, Pablo. Just sitting there minding his own business. All right, so we got $94,000 is our AGI. All right. Now, the guy was saying you're in a 22% tax bracket, 22% marginal tax. No, because this is a mistake he made. No, you absolutely are not in a 22% marginal tax. These people are taking RMDs, which means they're above 65. So we're going to give them, what is it, 13,300? I don't know. We're going to say 27,000 is a standard deduction, roughly. It's 13,300 last year. I think it went up to 30. I can't remember. We'll just say 27,000 is a standard deduction. All right. So whatever that gives us there, what's that? 94 minus 27. 67,000 is our taxable income. All right, 67,000 is taxable income, which means we're well still below the 22%. We're in a 12% tax bracket. So when he's saying he was saying your marginal rate is 22% because he wasn't taking the standard deduction, and that's your marginal rate is your taxable income. How much tax do you pay on the next dollar of income? Well, in this case, how much tax you pay on the next dollar of income is 12%. And so his whole premise was that if they're in, so he had them paying 22% on their $34,000 of Social Security taxes. $34,000, oops, $34,000 times 22%. He had them paying $7,500 in taxes on Social Security. And tax on Social Security, and it's simply not true. I'm sitting there thinking, no, that's just wrong. So in this case, we can quickly figure this out. I think the let me get my tax brackets here. Do I have the tax code in here or not? I can't remember. Hold on a sec. My other book I do, I think. Yeah, and this is from 2018 tax brackets. So let's just see what the shall we, what the tax rates are. All right, so we got here's the tax brackets for married right there. Nope. There we go. So married. There we go. So the first 19,000 is at 10. Yeah, first 19,000 is at 10. So that'd be 1,900 in tax, and then 67 minus 19 is at 12. 67 minus 19 is at 12. And with 67 minus 19 is at 48, I think so, right? So if 67 minus 19, ooh, yes, 48. Man, your old buddy Josh is smart. 0.2, 5760. So we got 48,000, 12%. What did I say here? That's 5760. So 5760 plus 1900. Total tax is 7,600 bucks. All right. So he ended up paying just almost that amount on Social Security alone, and that's just dead wrong. I mean, his total taxes here is 7,600 bucks on. They had 40 on 100,000 bucks. They're paying 7.65 as their effective tax rate. So hey, that's a big mistake because, and this is what my man Wes Moss did when I started my YouTube channel. They weren't taking. They just get, again. This is a pet peeve of mine. Because Wes Moss had a thing where how much, he basically was saying someone else needs to keep working in retirement because he wasn't calculating the taxes correctly. He wasn't using standard deductions. He just had a base 85% taxes on Social Security without going into the provisional income. I think he even had him at a marginal rate of 25%. The whole thing, I was like, this is not true. The same thing with this other guy here is not true. If you don't know how to do the taxes, you got to figure it out. I mean, he was on, except for this. The first part, to his credit, this guy, he actually got it right. Rick and Sue, the provisional income was correct. This, though, is not. This is a 20%, 22% bracket if this is your taxable income. But this is his AGI. Thus, it's not your taxable income. And so because it's not your taxable income, there is no tax bracket there. The AGI is not what determines your tax bracket. It's your taxable income that determines your tax bracket, because your tax bracket, your marginal tax rate, is the earnings you make, the X dollar of income. Thus, in this case, their tax bracket is 12%, and that happens to coincide with the marginal as well. I'm sitting there thinking, dude. Anyway, so that's, I hope this works for you. I hope you understand. And if you do these calculations yourself, so if you are on YouTube and you see people that, again, I don't mean to sound like this guy's doing it like he's being a shyster. I don't mean that. I just think he missed the boat. But it's a big deal to miss the boat. I've missed a boat. I've deleted a couple. I probably deleted 5 videos over the last year because I missed a boat. People called me out on it. I said, no. I said, oh, you're right. I deleted it. And I don't want to leave it out there without the corrections, because that's bad advice. It's bad info. I can't remember what the one was. I was like, oh, yeah, it was pretty. I forgot what it was. But I missed it. Anyway, so just keep that in mind. All right, we'll see you.